In the heart of a financial revolution, a single idea sparked into existence, promising to bridge two worlds. It wasn't born in a gilded boardroom on Wall Street, but in the untamed frontier of digital currency. This is the story of a pioneer, an outcast, and an undeniable titan. It's the story of Tether, or USDT, and its journey from a simple concept to the controversial cornerstone of the crypto universe. It's a tale of ambition, of weathering storms that would have sunk lesser ships, and of a relentless drive that has reshaped the very fabric of modern finance. The story begins in 2014, a time when the world of cryptocurrency was like the Wild West, volatile, unpredictable, and largely inaccessible to the average person. The dream of a new financial system was real, but its violent price swings were a barrier to entry. Into this chaos, a group of visionaries operating under the name Realcoin introduced a revolutionary concept. Their goal was elegantly simple, yet profoundly ambitious: create a digital dollar, token that could live on the blockchain, move at the speed of the internet, but hold the steady, reliable value of the good old US dollar. This was the birth of Tether. The mechanism was designed to be a bedrock of trust. For every single USDT token put into circulation, they promised $1 would be held safely in a bank account. It was a simple one-to-one pledge, a digital IOU backed by cold, hard cash. This brilliant innovation wasn't just a technical feat, it was a lifeline. For traders navigating the treacherous waters of Bitcoin and other altcoins, USDT became an essential safe harbor. When digital storms raged and markets tumbled, you could tether your assets to the stability of the dollar without the hassle of cashing out to a traditional bank. It was the bridge that connected the old world of fiat money to the new, burgeoning world of crypto, making it easier, faster, and safer for millions to participate in the digital economy. USDT wasn't just a convenience. It was the essential gear that allowed the entire crypto machine to run more smoothly than ever before. But in any story of great ascent, shadows are bound to be cast. From its earliest days, whispers of doubt began to follow Tether. The promise was so powerful, so fundamental to its existence, people naturally began to ask, "Show us the money." The core of the controversy rested on a single, crucial question: were the reserves truly there? Did every USDT in circulation really have a dollar counterpart sitting in a vault? This question would come to define Tether's public image and trigger a series of crises that would test its resilience to the absolute limit. The first major tremor struck in 2017. As Tether's popularity exploded, so did the scrutiny. The company had always maintained its one-to-one backing in US dollars, but then came the bombshell. After abruptly severing ties with its banking partner, Noble Bank, the company made a startling admission. Not all of the circulating USDT were fully backed by cash in the bank. The news sent shockwaves through the market. Trust, the very foundation upon which Tether was built, was shaken. The price of USDT, meant to be a stable rock at $1, temporarily broke its peg, causing panic and uncertainty across the entire crypto landscape. It was a moment of crisis, a trial by fire where many believed the Pioneer Stablecoin would finally fall. This event opened the floodgates. The whispers of doubt turned into a roar of litigation and regulatory investigations. Class action lawsuits were filed, accusing the company of market manipulation and misrepresenting its reserves. The New York Attorney General launched a high-profile investigation, putting Tether and its sister company Bitfinex under an intense legal microscope. The world demanded proof, and the journey to provide it was fraught with ambiguity. A series of reports and attestations were released between 2018 and 2020. But instead of clearing the air, they often muddied the waters. Some findings seemed to support Tether's claims, but they came with crucial caveats. The reserves weren't always pure cash. They were a mix of cash equivalents, commercial paper, and other investments. For critics, this was a betrayal of the original promise. For Tether, it was a necessary evolution in managing a treasury of unprecedented scale. As if the regulatory battles weren't enough, another crisis erupted in 2019. Revealing the operational risks of operating in the gray zones of international finance, Tether disclosed that a significant portion of its reserves, hundreds of millions of dollars, had been seized. The funds were entangled with a controversial payment processor called Crypto Capital Corp, which was itself facing legal action for operating as a shadow bank. The money was trapped, inaccessible. This wasn't just a question of transparency. it was a question of security. It raised terrifying new concerns about the safety of the funds backing the world's most important stablecoin. Yet through this gauntlet of legal challenges, financial shocks, and public distrust, Tether refused to break. It was a survivor, hardened by the very controversies that sought to destroy it. Against all odds, and in the face of relentless skepticism, Tether did not just survive, it thrived. While critics and regulators waged their battles, the market voted with its wallets. USDT's growth became a phenomenon in itself, a testament to its undeniable utility. It became the lifeblood of the crypto economy. In the world of high-frequency trading, where seconds can mean millions, USDT was the indispensable tool. It provided the deep liquidity traders needed to move in and out of positions, to hedge against volatility, and to execute complex strategies with lightning speed. Its daily trading volume dwarfed that of even Bitcoin, solidifying its status as one of the most liquid and essential assets in the entire digital world. Its dominance wasn't confined to the trading floors. USDT's adoption spread like wildfire across the entire crypto ecosystem. From the largest, most established exchanges to the smallest upstart platforms, supporting USDT became a prerequisite for doing business. It was the default currency of the crypto world. When the decentralized finance DeFi revolution began, USDT was there, serving as a foundational asset for lending protocols, yield farms, and countless other financial innovations. It was the stable ground upon which new experimental financial systems were being built. This unstoppable demand translated into breathtaking growth. Tether's market capitalization didn't just climb, it skyrocketed, continuously shattered records, soaring past the valuations of all but the top two cryptocurrencies, Bitcoin and Ethereum. At its peak, it became the third largest digital asset in the world, a multi-billion-dollar giant, born from a simple idea and forged in the fires of controversy. This immense success was a paradox. How could an entity so shrouded in doubt become so undeniably dominant? The answer lay in its first-mover advantage and its unwavering utility. For millions of users and traders, the practical benefits of USDT simply outweighed the perceived risks. It worked. It was everywhere, and it had proven its resilience time and time again. Today, Tether stands at a crossroads, a seasoned giant bearing the scars of its tumultuous journey. The company has made visible efforts to answer its critics and evolve with the times. In a significant move towards greater transparency, Tether now publishes regular, detailed reports on the composition of its reserves. While still not a formal audit, these attestations provide a clearer window into the assets backing USDT, revealing a diversified portfolio of cash, bank deposits, U.S. Treasury bills, and other liquid instruments. This is a far cry from the opaque early days and represents a conscious effort to rebuild trust. Furthermore, USDT has expanded its reach far beyond its original blockchain. It is now available on a multitude of networks, from Ethereum and Tron to Solana and Avalanche, allowing users to choose the platform that offers the best combination of speed and low transaction fees for their needs. However, the challenges on the horizon are more formidable than ever. The battlefield of stablecoins is no longer a one-horse race. Competitors like USDC, backed by regulated U.S. financial institutions, have risen to prominence, often marketing themselves as the safer, more transparent alternative. This growing competition is chipping away at Tether's market share and forcing it to constantly justify its position as the king of stablecoins. Even more daunting is the looming shadow of government regulation. All around the world, from Washington, D.C. to Brussels, regulators are no longer just watching, they are acting. The immense size and systemic importance of the stablecoin market have placed it directly in their crosshairs. Lawmakers are actively drafting new rules to govern these digital dollars. And given its history and sheer scale, Tether will undoubtedly be at the epicenter of this new regulatory framework. The fight for its future will be waged not just in the markets, but in the halls of power. The journey of Tether is more than just the story of a cryptocurrency. It's a captivating saga of innovation against all odds, of ambition in the face of adversity, and of the inherent risks that come with rewriting the rules of finance. Despite the years of controversy, the lawsuits, and the persistent doubt, one fact is undeniable. USDT has fundamentally changed the way we trade, transact, and interact with digital assets. It was the pioneer that dared to build a bridge, and in doing so, it became the controversial, resilient, and indispensable heart of a financial revolution. Its story is a powerful reminder that even in the face of the fiercest storms, a powerful idea, if it proves its worth, can not only survive but emerge stronger, forever altering the landscape around it.